He also supported teams of researchers as well, and he's a computer scientist who also provided trainings in many areas, and also he's a creator of crypto money. Without further ado, I'd like to give the floor to Emin Gürseler, to our virtual platform. The floor is yours.
Hello.
Hello. Okay, if you can hear me, then I can start my presentation. Thank you very much for your invitation. And today I'm in Florida. I'm here for a workshop. So I'm reaching out to you from a hotel room. And today we'll be talking about the changing financial markets, and so in the coming 5, 10, or 15 years, what kind of changes are awaiting us? There is an incredible period of changes awaiting us, and so the cornerstones, so this change so there are some problematic assets. So we are heading towards a world that is shaped by blockchains. If you look at the old world, this old world has 3 characteristics. One of it is that the assets we own are mainly physically owned. For example, when we go to the groceries, the money we use is something we hold physically in our hands, or the stock certificates or NASDAQ or NYS. So the stock certificates and settlements is caused by the physical existence of this stock certificate. Or in the 1970s, people took a pair of scissors, and also people cut out coupons from government bonds. And so that government bond was something that we held in our hands physically. And so these are the 3 important building blocks of the old world. And secondly, the calculation of these assets is made in silos, so they are kept in closed systems. And for example, in a transaction to be made in Borsa Istanbul or New York Stock Exchange, or right to use it, a transaction in NASDAQ, although they are very similar to each other, so there are systems in complete different silos. And within this, and the most important characteristics of these systems is compliance. So complying with legal requirements. Yes, we had a small technical problem, but there's still echo. Okay, I'll get rid of this echo if I do it. If the technical team wants to talk to me, then they can reach me over WhatsApp. I hope you can hear me and see my slides. And because I'm in a hotel room, I didn't get a chance to control check this beforehand. So let me continue from where I left off, as you know. So there's some changing assets at the moment. And so there's a shift from traditional finance, and they're heading towards a new structuring. So we had physical ownership in the past, and also we had siloed databases, and also third of all, we had compliance. And compliance, so let's talk about how that compliance is taking place in the world. It's quite simple. So inspectors and auditors, they conduct audits retrospectively after things are over, and at the end of that audit, from an empirical point of view, we see a picture emerging all across the world. At least in the United States, every quarterly, and there is there's a minor program, and once every 5 years, there is a big scandal. And one of these scandals that for example, the company Dole, so they couldn't, so they had 38 million stock certificates, and then the number of stocks traded in and in the exchange was 53 million, So the simplest thing that Wall Street had to do was keeping the number of those certificates accurately, because once it's disrupted, this has a negative impact on the value of the company. However, the system that we have that's available to us failed to do it. When there's something unexpected, there are certain fines, and also in exchanges, we encounter problems frequently, and also there were scandals, and so the front running incident and also others, and all of these they're found out by auditors post facto. When we look at the new world, and so the asset and also owning the asset is not physical, but it is programmatic. And also these assets can be used within programs, and also this can be directed by computer programs, and also instead of siloed very databases. And so they're stored on open sources. And so this is what underlies a blockchain. It is open to everyone. A blockchain can be used by everyone, and everybody can connect to this on equal conditions. And once you do this, that you have a very democratic infrastructure, and this infrastructure is much cheaper, and also it has brand new characteristics. And hopefully I'll have some time to touch upon this at the end of my presentation. One of the most important characteristics of this new structure is that compliance with legal requirements is embedded into the system. And previously we did some things, and then we checked things retrospectively. Instead of this, whatever the rule is, it is embedded into the system, and then it won't be possible for the system to breach that rule. If there's something we don't want, then it's not possible for that thing to happen. This is a brand new paradigm, because instead of looking at things retrospectively, and once you program things in advance, then there's no need, maybe I can't say there's no need for auditing, but so only the codes are audited and inspected, and from that point on, the undesired acts do not take place. So it is under our control. This is a brand new structure, and so within the structure, we can we can include all sort of characteristics that is known to you. So this can be stock splits, and so it can be the split of shares, and also lockup periods, and also compliance with regulations. And when it comes to payments, and it can be bond coupons, and also dividend distributions or fund distributions, and all of them can be made over a blockchain. It's not only possible, but it's also easy to do all these things. Compared to the other systems, we have a brand new system which can be used very easily. And also when it comes to compliance, so there are some transfer restrictions, and also there are shareholder restrictions and KYC, and it's possible to do all these over the blockchain. When you look at blockchains, and starting from 2009, when Bitcoin emerged, and the group of people the system first appealed to is not a group that can talk to you about compliance, but the blockchains have changed a lot. They are not what they used to be. In the first times of blockchain, there was an extra legal structure. So around these blockchains are people. So they are establishing new systems, which also include legal requirements as well. And I also they include everything. It could be fund management, and it could be also payment systems and trade finance as well. It's a very deep topic, as you know, and also supply chain. So blockchain can be used in a very wide range, as you can see. And at least in the United States, when I look at Fortune 500 and some 495 out of these 500 companies have definitely worked on a blockchain each, and then they at least have developed a proof of concept. But you can ask me, yes, if they have developed it, where are they? So everything they have done have remained at the level of proof of concepts. And if you want, you can elaborate on this if we have time with the technology of 4 or 5 years ago. And these permission blockchains, these were closed blockchains, so they didn't make any progress. And except one of them, Burger King, and came up with a product which was based on my system. It was called Whopper system. They use a protocol that was created by me. But other than that, I couldn't see any proof of concepts and turning or evolving into a system on which people are paying. And the reason for this is, so I'll try to explain you the reason for this. And so I will be telling you about the reasons why these systems failed. So we have a brand new infrastructure, and so as a domain, and in order for this infrastructure to go to the next level, what kind of problems do we have? Do we need to overcome? And the biggest reason why blockchains couldn't go up to the next level is that they haven't, it wasn't possible to scale them. What does this mean? When we look at Bitcoin, and Bitcoin is the oldest of these systems, and blockchain itself. So a blockchain can conduct 3 different transactions in a second, as you know. So what can we do with this? So for example, if he put the bridges in Istanbul on the first layer of blockchain, then it fills the capacity of blockchain. And once they trade our bridges, then its capacity is totally used. We needed some new and faster systems. And Avalanche, the system called Avalanche, we started creating it about 3 years ago, and 14 months ago, if I'm not wrong, it was commissioned. And Avalanche, and one of the most important characteristics of Avalanche is it is 3 times as fast as the transaction speed of Visa. And so you can put 3 different worlds side to side, and it can absorb the transaction speed of these 3 different worlds. And the reason for this being the underlying protocol is different and much newer. And so it is a breakthrough, if I may say so. And the second characteristic doesn't have to do with capacity. I told you, I said the Bitcoin could make only 3 transactions a second. There are efforts to scale it up on the second layer. Some systems like Lightning have emerged, however, they're not sufficient. In addition to capacity, people in the distributed systems, and the second, and so there's a second characteristic which is much more important. Capacity and speed are most of the time taught interchangeably. But when we say 3 transactions in a second, once you finish, for example, in Bitcoin, a transaction can last so it takes an hour for a transaction to enter and exit the system. Because the transaction is part of a big pipeline, it takes a long time. And among these new blockchain protocols, the fastest one is the Avalanche system. And it takes only 750 milliseconds for a transaction to be completed. So the avalanche can do 750 milliseconds what Bitcoin can do in 1 hour. So once the system complete and finalizes, processes a transaction with the seconds, and also it can include it into the ledger in an immutable way. And also the third, while doing all this, election scalability and higher speed, while doing all this, and so we shouldn't compromise decentralization. And Avalanche has more than 1,000 nodes at the moment, and the number of participants is much higher. And also in every decision that is taken, and all of these 1,000 nodes play a role. And they all participate in the consensus, and that messaging is taking place in the system. And so the biggest move to speed up all the other systems, they reduce the number of these nodes. Sometimes we have seen it reduced to 20. For example, there was EVOS and also Ethereum. They say that Ethereum, it will be launched soon, but we don't know when it will be launched, but they say it will be in 2023. And so there will be 128 nodes for every decision taken during the day. After changing the way of working of the world, and after the incumbents are pushed aside, and involving to 128 blockchain professionals is a wrong starting. And I believe that such a system should be able to contain a big number of nodes, and Avalanche is the only system that I know which is capable of doing this. And the second, why don't we see blockchains everywhere? Until very recently, Avalanche, Cosmos, and Polkadot. So there are 3 new chains, and until they were introduced, all the other blockchains belong to the whole world. However, they didn't include the rules of any particular jurisdiction. For example, think of Bitcoin and Ethereum. Yes, they belong to the whole world, and the same goes for Avalanche. However, on Bitcoin or Ethereum, if you want to do something specific to Turkey, if you're a Turkish company and if you have a valuable asset and if you want to split and sell it, for example, let's assume you have many, for example, apartments in Istanbul, you have real estate, and I'd like to split it and sell them to the whole world. So they didn't have the infrastructure needed for this. Once the rules are amended, the laws are amended, and because there were many changes throughout the life of these properties, you need to be owning your network. Bitcoin does not, for example, but Bitcoin belongs to the whole world. And the same goes for Ethereum, and also the same goes for the default version of Avalanche. However, under Avalanche, we can also create some subnets as well. For example, you can say mine should be faster. So you can say mine will be in compliance with the Turkish laws, and my subset will be in compliance with the US laws or EU laws or China. And so these are specialized subnets.
This makes a great difference, and I think that the world is not yet aware what kind of a difference this makes. We haven't seen the applications in practice yet. We are already at the heyday of this process. So when you look at it 1 or 2 years later, and when we have the hindsight, I think you will probably say that Emin had mentioned this. So we have interesting applications right now on Avalanche. We have about 450 DeFi applications. I would like to tell you about those. I'd like to give you small vignettes of what we can do, what the new world will bring for us. Very soon I will go back to this topic. And of course, we have blockchains. We are going to enter into a very interesting period. Previously, we had $1.5 trillion of value on blockchain. This is a massive amount. So On the other hand, generally speaking, we had 700, $800 trillion of values in the world, and 1.5% of it is in blockchains. That's actually a very minor share, but I think this will be much more significant in the future, and we will have our mark on this in the future. So it's very important to have this connection between the networks. In the upcoming 1.5 years, we will start to have these bridges among blockchains. And I think we are going to see a war of bridges. In terms of the bridge that Avalanche uses, of course, it's a different technology. And thanks to this differentiating technology, we will have trustless technology. It doesn't require trust. Thanks to this trustless technology, I think it's going to provide much faster and much cheaper service. If you have Ethereum, if you like to do transactions with Ethereum, but the transaction fee that you need to pay on Ethereum can sometimes be 300, 500, or sometimes even 1,000 US dollars of transaction fees, from what I heard. So you can get those values and you can switch to Avalanche thanks to these bridges, and you can perform your transactions on Avalanche and you can return it via these bridges. It will be much better. This is the world that we are in now. The place where value is produced no longer matters. We have a much more fluent flow of values among the blockchains. So wherever you need the capital, it will be possible to have the capital transported there much faster, and it's going to be much more efficient, and the systems will be much more productive. I would also like to tell you a bit more about Avalanche. I'd like to show you about the infrastructure. It's very important in differentiating infrastructure. As I mentioned, both Bitcoin and Ethereum have a single network as a system, but Avalanche is different. It is underpinned by sub-networks. So in addition to the default standard package, within this Avalanche, you already have 3 different sub-networks. One of them is what we call P-chain, which is platform chain. So what we do on the platform chain is to coordinate the other sub-networks. We have 2 important sub-networks. One of them is X-chain, which is the exchange chain. You can create assets, you can exchange assets on this network. And it's only about the values that are created and exchanged. When it comes to programming and smart contracts, these features are not within this network because it doesn't have these features. It has a much higher transaction rate. We also have, in addition to X-chain, contract or C-chain. This smart contract chain can do everything that Ethereum already does in the same way. Currently, Ethereum ranks the second. They preceded us. But whatever Ethereum does, this contract chain can do even more with an increased capacity. So this is a very interesting world. So once a website owner comes to us and they say, I'd like to set up a new system, but my programmers are enterprise programmers. They are Java programmers. They don't want Solidity, or they might say my software programmers want to use Rust, but I would like to use a virtual machine or WAS. So then the other networks do not offer many solutions because they have a single solution for the whole world. However, in Avalanche, we have use-specific networks that can be created. So that can be generated specifically for the use case. So what we see in the network is the throughput. As I mentioned, it's able to have transactions within 750 milliseconds. We have established the fastest blockchain in the world. And as I mentioned, it has a much more flexible structure. So this structure is underpinned by this protocol, which is different from Bitcoin and Ethereum. It is green, sustainable, it is planet friendly, it doesn't have any mining. Its electricity consumption is about 1 in a million as compared to Bitcoin, because the consensus structure, the protocol doesn't involve any mining activities, and it's only active when there are transactions. So the transactions are much faster in terms of load. Economically speaking, what is the return? It has 2 specifics. The first one is that if there is value within the system, the existing value doesn't consistently shift externally. There is not any external outflow to electricity companies. That's very important. And secondly, when the user uses it, they can do their transaction for only a couple of cents. I think it's not yet, so sending billions of dollars to anywhere in the world would cost only 5 cents. You can send up to $20 billion anywhere in the world with the Avalanche system. And one of the important features, of course, is that it is an open system. I'm sure some of our audience members remember it 20 years ago. In order to connect to Wall Street, in order to connect to New York Stock Exchange, you had to pay $150,000 per year in order to connect to NASDAQ. To get price feed, just for the price feed, several dollars had to be paid, a high amount of payments had to be made, but this system is open. Whatever internet has brought for us, blockchain has brought the same for us in terms of the payment. It's only a difference of 20 or 25 years. So when you look at the future, what will be the situation? This is a question that I receive often. They often ask me about the price. Is it going to be higher or lower? I don't know about the price. Of course, you would need a crystal ball to see that. I don't have that. But when you look at the technological trends, you can guesstimate what will happen in the future. Today, we have tokenization, which is about digitization of the assets. We are at the onset of this process. So the new value is about tokenization. So of course, the initial values that emerged are sui generis values, such as crypto, Ether, AVAX. These are crypto values, crypto assets. So there is an expectation, or rather a concern. So when it comes to the existing stock certifications, when will they be switched to blockchain? When will our existing infrastructure change? So which value will become part of blockchain and when? I tried to think of this. So currently the stock and stock certificates are at the lowest rates. So you have some breather period of 3 or 5 years. So what are the values that are being digitalized right now? We are talking about stable coins, which are exchange of dollars, euro, or Turkish lira, for example. There is 1 lira stable coins. So they exist in the blockchain systems. And one of the latest participants in this game are central banks. Singapore, the UK, Canada, Japan, the US Fed, all of these central banks are focusing on the central bank digital currency. These are digital currencies that are issued by the central bank. And we are talking about the way in which they are digitized in the blockchain technology. We also have gold, oil, etc. So such commodities are also being digitalized. For gold, it has been already the case for a long time as an inflation hedge. It has been an asset that has been sold as an inflation hedge. And we've also seen it in blockchain. We also have new assets that are called NFTs. I would also like to mention about these. When we were young, we had these small game cards. NFTs are a bit like those. Maybe you saw your children play with those game cards. These are newly issued assets that will be in the finance system. We can call them the precursors of newly emerging assets. I will go back to this later. So also something new that we see is that brand new assets are emerging in blockchain. For example, in the US justice system is a bit expensive. So we have been pioneers in something called initial litigation offering. So when you are a defendant, but if the defendant or the victimized party doesn't have enough money, they can borrow money for the litigation, and afterwards, once the litigation is adjourned, they can return the money to the people who provided this money for them. So there are brand new systems as such. I expect them to be further developed. We also work on a brand new alternative, which is income sharing agreements. For example, there is a basketball player at NBA called Spencer Dimmer. So the future huge sponsorship amounts that he will receive in the future, he would like to bring them into blockchain, and he would already like to distribute it to the people who will support him in the future. So we also have derivatives, real estate, bonds, and stocks. So these are all traditional financial instruments. These are cornerstones of current finance, and they will once again be part of blockchain. As all these things are happening, we are also in the process of capitalization. A very high amount of money is needed by the people who use these systems. Generally, we don't receive a lot of euro, but USD. And we also have a lot of money, RMB, which is Chinese currency. We see that Turkish participants also have a big role in these markets because there is a brand new structuring. There are great rewards in the structuring. Everybody would like to have their share. So being a stakeholder in the establishment of the internet was not possible. But in the blockchain, it is possible to be part of this ascent of this new system. So all of them are based on smart contracts. So what do these contracts do? One of them is called staking. You might have heard of this. Explaining what staking is takes a long time, but the equivalence of it is more or less is the following. So we have these treasuries in normal financial world. It's very similar to the treasuries or treasury bonds. In addition to staking, we also have decentralized exchanges. So decentralized, in addition, so in the place of stock exchange, we have these decentralized platforms where you can have exchanges of assets. I would like to tell you how they work. We also have perpetual swap contracts, we have derivative contracts, we have lending platforms, we have flash loans and NFTs. I would like to touch upon these very briefly. If you haven't heard of it, you will hear it from me. So afterwards, the future will be all about digital economies. As compared to the current economy, this economy will be much bigger, it will be much more open, and it will also have much more capital. It will also have different risks, of course, as applicable. I don't know if we will have enough time to talk about this. I'd like to first of all talk about DXs. What are decentralized exchanges? They operate on the blockchain. So the people who would like to sell a digital asset and the people who would like to buy that digital asset come together on this platform. How is it different from New York Stock Exchange or NASDAQ? The most important difference is that there is not a site owner. There is no person who owns these exchanges, DXs. They are controlled in different ways, and they are open 7/24, 7 days, 24 hours per week. There is no interruption. There is no settlement delay. Once you have an exchange on a DX, it is immediate. So there are two different types. One of them are automated market maker, Unistock marketer, or Trader Joe. So the people who does the sale sells it to the system, to the contract, not to the counterparty. So the contract has a liquidity pool, and the person who's going to purchase it buys it out of the contract. So this contract is kind of an intermediary between two parties. We also have order book, CLOB. For example, one of them are DEXA, which is going to be based on Avalanche, central limit order books. So in the New York Stock Exchange, etc., you have this commonplace system which brings together the sellers and the buyers. So they both have different ways of working. One of the important or interesting things is that these decentralized markets have a bipart or bilateral market. It's not only open to the sellers and buyers, it's also open to people who want to contribute liquidity to the system to gain passive income. For example, you say that I have some AVAX, I have some dollars, and I don't want to sell my AVAX. I also don't want to sell my dollars, but for those who would like, I would like to provide liquidity for those who would like to swap AVAX and dollars. If you do that, you can get a significant amount of rewards from the system. So these decentralized exchanges bring about a very important benefit, especially in this post-pandemic period. We can open our digital assets to the whole world. not only to the Turkish market, not only to 80 million, but you can access 8 billion people. When you are going to buy something today, if the thing that you are going to buy is digital, it's open to the whole world. Let's say that you went to Singapore, you think it's very nice, and you'd like to participate in the real estate market. In the previous system, it was very difficult. It's very difficult to go to Singapore and try opening a bank account in Singapore. It's a very challenging system, but you can be part of this global blockchain system. If you have a denominated real estate system, you can buy or sell it whenever you want. 3 a.m., 3 p.m., it's open 7/24. So on these systems, so far, the compliance has been poor, but within about the upcoming 6 months, we expect grand leaps. Walled gardens will emerge. What is a walled garden? So even though it's open to the whole world, once you swap it, the counterparty will always abide by your own laws. So you can always predetermine it. So these smart contracts will be available very soon, within 6 months or 1 year. So in addition to those, we have lending platforms. We have brand new smart contracts. One of the things that they do is that you are able to sell the assets that you own. And in return for the value of the assets, you are able to borrow the assets. So let's say you have $1 million worth of AVAX, you can keep that $1 million AVAX. You can convert 800,000 to money and you can use it as long as AVAX retains its value. If it's depreciated, of course, you have a risk in terms of liquidity, but that's of course part and parcel of the system. But these are all new platforms. You can already do this in the normal system, but it would take much longer to do it because it's much more complicated. There is something that really excites me. It's a third and brand new smart contract system, which are called flash loans. So what do they bring for us? So you don't need a collateral. You don't need to show any ID. So a person about whom we have no information, it's possible to lend to them very high amounts using blockchain. Let's say that on one of the DXs, you saw there is an exchange rate difference. When you convert A to B, B to C, or C to A, it's possible to make money based on these conversions. This happens sometimes. If you lived in the 1990s, you know about it. Between sterling, franc, French franc, and Deutsche Mark, you also had the situation. So you need normally billions to do this. But in blockchain, it's possible to do this without having any background. You can buy billions of dollars. How does that work? So thanks to the infrastructure of blockchain, it's possible for blockchain to transfer you money to the tune of billions of dollars. You can use it and you can transfer it. You have only 5 milliseconds. If you can come back within 5 milliseconds with the service fee, okay, everybody's happy. If you cannot, then blockchain reclaims that money as if you've never received it. So it doesn't bring about any risks for the lender. So finance will be at a much more different level because finance will be easily accessible to people who need it. So finally, I'd like to talk about NFTs, non-fungible tokens. They are very comical characters, such as Alex apes, etc. They're a bit like quartet cards. As you know, children and youngsters generally play with these. If you ask me whether there is something much more interesting that underlies it, there is something much more great. You shouldn't misunderstand me. The thing that's being sold here is not this picture. So actually there is a digital asset. It's the ownership rights of this digital asset. And this is a sui generis digital asset, this sui generis digital asset. What else do we know? It's not only about these pictures of monkeys, apes or men, etc. All kinds of credit issued by any company is a commercial paper, is a sui generis commercial paper. And the lifetime is just like the lifetime of the NFT. So we have brand new emerging NFT pools, NFT asset systems. And in the future, we will have these corporate bonds and commercial paper funds, they will create the infrastructure for the handling of these funds. I hope that I've given you a small vignette of what is to come in the future. These smart contracts are really different. They will really radically transform our world, and we are at the cusp of a financial revolution. This revolution will change the way we structure markets, we carry out our business and build our markets. It will really determine the way in which we structure negotiation. It will change our day-to-day life. People who work on Wall Street know about it. It is high time to change those systems. We still have systems that use Kobo. That era is now over. A brand new era is about to come. So the meteor is visible in the sky. Ignoring it is not an option. So I hope the vignettes that are provided for you have created some excitement in you. So this infrastructure is open to everyone, and this is the beauty of it. I hope blockchain will trigger more interest from you. Thank you.